GM mi Coin Bureau familia, and welcome to another episode of Q&A. And it's a special day again today because we've got the Crypto Don back on. Ciao, guy.
How you doing? I thought you were going to speak Spanish for the whole thing.
That's Italian. I was trying Italian, but that's the extent of my Italian.
See, it's totally mine as well. I thought it was Spanish.
You're worried we're going to do this whole thing, and I've been studying Spanish on the back end, or Italian on the back burner.
I was like, oh no, we're not going to do it in a different language, are we?
No, this is not Italian crypto Q&A. But
coming soon, though.
Yeah. But you ready for some exciting questions?
Yeah, let's do it. Do you want me to lead off?
Do you want to kick off, man?
Yeah. Okay. So thanks as ever to everyone who sent questions in on Instagram. These are a few that were chosen for us to answer. Eli Hueri has sent in. This is a real poser. I'm glad this is going to you. What exactly is BTC UTXO consolidation, and how do you do it?
Yeah, I did have to brush up on my Bitcoin dynamics before this to be 100% certain. But just so you guys know what UTXO is. So Bitcoins and how Bitcoin keeps track of the amount of coins in your wallet is through a method of UTXO. So it basically calculates, which stands for unspent transaction output, which is basically all the inputs that have come from previous transactions, and it collects and sums all of the UTXOs in your wallet. This is opposed to sort of other blockchains like Ethereum, etc., which have account balances for each wallet. So essentially, you can think of it as akin to like cash in a bank account, right? You have all these different notes, right? So essentially, if you think about it, if you're making a transaction with cash, you've got $70 and you want to go and make it, or $50, a $50 note, and you want to make a transaction for $30. You pay them $15, and then that's your input for the transaction, and then you'll get returned a UTXO output, which is change from that back into your wallet. There's another UTXO. So essentially, UTXO is a collection of all of these things, and that summed up is the total balance within your Bitcoin wallet. Now, obviously, the more transactions that are coming in, so the inputs for these transactions coming into your wallet, the more UTXOs you're going to have. And the size of a Bitcoin transaction is not determined by, and the fees of a Bitcoin transaction are not determined by the amount of Bitcoin you send in, but by how many UTXOs are included in the transaction. So naturally, if there's lots of UTXOs, it's going to be quite expensive to send a transaction, right? So that's part of the reason and the problem with having a lot of these UTXOs or smaller UTXOs in your wallet. So what people then can consider doing is UTXO consolidation, right? So that's basically akin to essentially converting these smaller UTXOs into one large UTXO. So akin to taking all of your change to a bank and getting a bigger note denomination.
Like a roll-up.
Yeah, exactly. That basically, you can do that by sending yourself, you can send yourself a transaction. So you send out all of your Bitcoin through, and it collects all of the UTXOs, and then it comes back as one singular UTXO.
Ah, I see.
So it's, so then all wallets can do that. It's pretty straightforward to do. Many people can, essentially they say that if you've got more than 100 UTXOs, you should consider it. And each UTXO shouldn't have a bit more than 0.1 Bitcoin in terms of that individual UTXO. Are there risks? The only risk, big risk there is with the UTXO consolidation is privacy. So essentially, if you've been sending and been transacting with numerous different people across wide ranges, and they've given you a UTXO when you've done a transaction, and it's come back to your wallet, and you consolidate that all into one wallet again through one singular UTXO, then they'll know exactly who it is and how much that you hold in Bitcoin, because it's not split across all these separate UTXOs, which they can't attribute to one singular person.
So you're sort of revealing your hand.
You're revealing your hand, how much crypto you have across all the UTXOs you've done, all the transactions you've done with all the parties, be it exchanges, people you've been sending money to, merchants. So that's one of the big concerns. If you're worried about, if you've got a lot of Bitcoin potentially, and you don't want people to know how much you have, there's a concern for OPSEC. But that's that's the one big concern with UTXO management, with UTXO consolidation. But it can save a lot on fees, right?
Okay.
Especially if you're doing a lot of transactions. And that's another reason why people say sometimes you should, all these DCA bots, right, that basically give you transfer a little bit to your non-custodial wallet every single time they do a small transaction on an exchange. You're basically collecting a lot of these UTXOs, which is increasing the size of the transaction you'll have to send later on if you want to. So
Okay.
Yeah. So that's a bit of UTXO consolidation for anyone who asks, or if you come across it again.
That's good. That's a good explanation. That's a good, because it's one of these things that I've heard it talked about more and more recently. It seems to be, I think Bitcoiners especially have been.
Bitcoins, exactly. And I think that that's part of and that's why a lot of the, it can become difficult from transaction management perspective, and why smart contract blockchains are a lot easier to use sometimes, because of the fact that they have this account ballot that's attributable to every single address. Yeah. Whereas Bitcoin is taking a collection of all these separate transaction inputs.
Well, so, if it saves you fees.
Yeah, there we go. Yeah. And especially now as Bitcoin fees are becoming more expensive, it's anything that can help people out. Especially if you have, as Bitcoin also becomes more expensive, right? As it becomes more expensive, it's not the size, it doesn't matter how much you send in, it's basic in terms of dollar value, but it's the amount of inputs in terms of these UTXOs. So if you can bring those down, you decrease your fees.
Great.
Cool. So that's UTXO consolidation. Now on to the next question. And this is from Salvin De Silva. And he's asking, is Mr. 100, Jamie Dimon and co. fudding BTC publicly and buying secretly?
Jamie Dimon and co. Is that Jamie Dimon and all his mates at JP Morgan?
It's all of his buddies there in the secret Wall Street cabal.
The Wall Street FUD factory.
Wall Street FUD factory, they're the Mr. 100, the 100th largest Bitcoin wallet, I think. Yeah.
I like the idea of Jamie Dimon and a group of other sort of Bitcoin fudsters all meeting in a sort of oak panel room somewhere, like, just off Wall Street. And
what are we going to say on CNBC today? Where are we going to go and call Satoshi out?
Satoshi. And then actually, fudding it and then buying it.
Yeah, exactly.
If that was revealed to be a thing, it wouldn't surprise me in the least.
No, it wouldn't.
Maybe I've just been around this space too long, but really nothing would surprise me.
You have to be a little bit jaded and skeptical when it comes from the TradFi guys, when they come out and they explicitly FUD Bitcoin all the time. Yeah. And then secretly you find out what their firms are doing.
Yeah, it's just like, oh, right. So, no one's really listening to you. Is Mr. 100 Jamie Dimon and co? No, Mr. 100 is Upbit, I believe.
Is that Upbit?
Yeah.
Did they clarify that exactly? Because I think there's been speculation. I saw speculation it could also have been the Qatar Sovereign Wealth Fund. Okay. The on-chain trackers have said it's most likely Upbit's, cold wallets, which is fair. Wow. Yeah.
If it being Jamie Dimon and co. is a better story than it just being another exchange wallet.
Yeah, exactly.
Albeit a degenerate Korean exchange.
Yeah. I wouldn't surprise me though, as you mentioned. I mean, JP Morgan, that they basically, it was revealed that JP Morgan holds some Bitcoin ETF shares.
Yes, yeah.
Just crazy.
It's like, no one's listening, Jamie.
Yeah, no one's listening.
Give it up.
Get in here! Take a seat, sir. Go on. So tell me about these anxieties you've been experiencing. When did they first manifest themselves?
Well, I think they first started when I got into crypto. I started to worry about all kinds of stuff.
Such as?
Well, I became anxious that I was spending, way too much on exchange fees. Like every time I made a trade, boom, more precious crypto gone. And I felt like I was missing out in other ways too.
What other ways?
Well, for instance, why didn't I get a sign-up bonus when I registered on an exchange? I mean, come on, they should be welcoming me with open arms.
That's a common feeling for many people in crypto.
Yeah, go figure. And I kept getting told to buy a hardware wallet to keep my crypto safe, but some of those things ain't cheap, huh? I mean, what's that guy to do?
Well, there's a cure for those concerns.
You mean medication?
No, I mean like the Coin Bureau deals page. It has trading fee discounts on top crypto exchanges. It offers sign-up bonuses of up to $60,000, and it has discounts on the best hardware wallets too.
You mean I just go to the Coin Bureau deals page and I'm cured?
Yeah, absolutely. Just head down using the link down below.
Okay, I'm on my way.
Okay, right. Dots, so many dots, it's an interesting name, asks, considering to buy Pendle tokens, what are your thoughts about it? Upside and risks.
Pendle, yeah. Okay, so Pendle, just quick TLD on what Pendle is. It's a dynamic automated market maker for trading and yield-bearing assets. So basically, the protocol allows people to separate out the yield from the principal component of yield-bearing tokens and cryptocurrencies. So it's kind of like being able to separate out the yield and trade it as a token separately, as like a sort of derivative on the yield itself, and take bets on yield. It's kind of like interest rate futures in the TradFi markets, right?
Right.
And it's interesting because I think that, that the interest rate futures market in TradFi is one of the biggest derivatives markets out there. It's absolutely massive. Think about all the interest rates on bonds, forward rates, Fed rates, credit and all that. So in this sense, they've also, and they obviously now focused on people use Pendle to separate out the principal and yield token from other yield-bearing assets, be it ETH, staked ETH, it's been a big component of the play on the future airdrops on EigenLayer.
Okay.
So basically, people were playing the potential airdrops and trading the token and the yield and the potential, like taking a future bet on what the airdrop could be on Eigen. And that's how it was able to get up to 4.4 billion TVL. It's also interesting, though, that they've also gone into, they've done an RWA integration or announcement where they could basically potentially also tokenize yield on interest-bearing assets like treasuries and bonds and things like that, and trade derivatives on that. So it's definitely a large use case and need for, sort of tokenized interest rate futures. Now, that's what it is basically. As I said, it's got 4.4 billion in TVL, and a lot of that was a play on EigenLayer, or EigenLayer's future drops and points. Arthur Hayes is an advisor, and he's been tweeting a lot about it. So, obviously the power of
Arthur.
The power of Arthur to show. But in terms of Pendle itself as a token, so obviously now the question is, that's just the protocol is. Pendle is, the token itself is a governance token. So obviously the question is, and this is a question we sometimes get, is like, I got last week, is like, does a governance token, because the governance token, the component is basically just being able to govern the protocol, right? Is it itself a bet? Are people buying it just as a bet on the protocol? Is there any use cases for governance? Because people aren't really voting in these things. So it's kind of just an alpha play or beta play, on the
or is it a sort of longer term bet that the protocol will do a Uniswap and eventually start, giving fee revenue to token holders?
And that's actually interesting, because what Pendle does is, you just hold in the Pendle token. So Pendle is you got to obviously stake it. And then it's called vote escrowed Pendle. You lock it up, and you basically then not only can vote, but you can also get a part of the fee revenue generated from the AMM deck. So 3%, I think, is distributed. I think it accrues back to them, and you can also vote on liquidity incentives. So that's potentially a value add for vPendle, but you then have to lock it up. And the question, it's not easy to tell you. How long you lock it up. The value of your vPendle is dependent on how long you lock it up and how much you've locked up. So there's no free lunch. You're going to have to lock something up. So that's the tokenomics of Pendle. I think now the question is risks, rewards, upsides. I mean, it's got a 258 million max supply, so it's got a max supply, which is obviously some view as a positive. The risks, though, in terms of it, is what I meant. Well, Eigen, right? Like, so essentially, Eigen's not a risk, but it's something like Eigen-esque, right? Where you trading and you're betting on a particular future interest rate swap or interest rate drop of some description or points system. And especially in this case, where a lot of these people are playing on the Eigen yield, right? And then there was when the Eigen, which we'll come back to with an Eigen question later, but when the Eigen eventually did drop their airdrop points, there was concerns because the season 2 of it was only when the Pendle guys were getting rewarded and all this kind of stuff. So there is risks. Look, it's tokenizing and rehypothecating yield. It's highly financial engineering. It's highly financial engineering and tokenizing yield, which is leveraging things up. Now, we've seen this before in TradFi, subprime mortgage. We've seen it with highly leveraged going on in crypto as well. Rehypothecating and restaking and all this kind of stuff. So
it is not without risk.
There's no without risk.
Significant risk.
And you layer risks on, especially when it comes to something like EigenLayer as well, where there's obviously the concerns around slashing risk, which is an additional risk, smart contract risks. It's not just the yield risk. So there are risks. It's smart, but there are risks. Yeah. Cool.
Well, if you were listening to that excellent explanation of what Pendle is and how it works, and thinking, my gosh, here we go, more financial voodoo woo-woo, DeFi, rehypothecation stuff. Don't worry, you're not alone. I kind of feel like it's amazingly clever what these things do. But it's sometimes it just like,
Yeah.
I just hear it and I'm like, why would you do that?
Yeah, no, exactly. And it's kind of like, we come back to also the subprime crisis, right? You know how they had PhDs and like super smart people working on these hedge fund models that would and working in the investment banks that would run models on the risk of of default in AAA tranches on subprime debt or something like that.
Yeah.
And all their models said it's not going to happen. It's not going to happen. But sometimes when things are falling, and also another thing is people like your models may not work when everything is going, haywire. That basically all these things come together, and then your model's kind of like with all the variables you'd controlled for, and those variables now also out the window. That's when things go crazy. So
yeah. Kind of the more complicated things get, the more concerned I get.
Yeah.
But there we are.
Cool. Good question. So next one is from BMM9.11, and he's asking your favorite altcoins and why.
Goes to a nice, simple question.
Where we can shill our bags.
Yeah, time to shill.
Easy.
Okay. All right. Well, should we just go back and forth with one? With one each?
Sure.
Yeah. Okay. I'll start off. This isn't one that I currently hold, but it is one that I'm thinking about. We covered it. I think it was last week or the week before on Coin Bureau Club. It's called Hopper. HOPR. And this is a protocol that encrypts metadata.
Interesting.
Yeah. Now, metadata is, well, Hopper describes it itself in its kind of about page. Metadata is data about data. Yeah. So if I was to send a file to Nick, the metadata attached to that file would contain, would have data like when it was sent, IP addresses, things like that. All this data about the actual data that I've sent. And that metadata can be very revealing. That obviously has big implications for privacy. So Hopper is encrypting this metadata, looking to keep it private. Insofar as because when you send crypto, there is metadata, the wallet metadata. So I think this is a really interesting project. I think it's if you're a CBC member and you've seen the review, you'll know it's not without its flaws like every other project. But I think it's trying to do a good thing. I think it could be fundamentally important to crypto and not, especially to people interested in privacy, which people really should be.
Yeah.
And interestingly enough, the token is listed on Coinbase. So now this may sound cynical, but for the coming bull run, I think coins and tokens that have got exposure to US retail and to retail elsewhere through big exchanges like Coinbase, I think they stand a better chance of doing well because the altcoin market is getting so saturated now. And I just don't know how many people, how much of wider retail is going to be able to access, some of these more exotic altcoin exchanges. And I think it is something to bear in mind for this bull run. How accessible is the coin or token you're interested in to retail? So Hopper, I think, is a really interesting one, and it's one that I am considering buying in the not too distant future.
No, it's interesting. And if you guys aren't club members, it's fine. There's also, we've just got a review on the coinbureau.com of Hopper as well.
Okay.
There's also a written review of Hopper.
There you are.
That's very interesting. So have they actually, have they proof of condition? Have they done this? Have they tested it out yet in terms of like encrypting this data?
It's a functioning protocol.
Okay.
So I think it's definitely worth checking out. Worth checking out either of those reviews because it's promising.
Definitely a use case for that. Especially reminds me of when you send images to people, you think that just the image they won't be able to tell where you're at or what you're doing.
Yeah.
All images have EXIF data, and EXIF data is metadata.
Yeah.
And that contains all this information, geo information, timing, all that kind of stuff. So I think there's definitely a need for this. Okay, so that's Hopper. One of my altcoin picks then, I've said it before, I'll say it again, it's an Alt1 NEAR protocol. I know you hold it. I hold it in my portfolio. I've just got to say it. I think it's a very impressive project. Obviously, the people behind it are super smart. Ilya as well, the touch of Jensen and all. You actually got the touch of Ilya as well.
I got the touch of Ilya as well, so you can be bullish on me.
Be bullish on Guy. Ilya came and did an interview with Jess did in the studio, and that's on the Coin Bureau clips as well, so you can watch that. The tech is amazing, dynamic resharding, and nightshade consensus mechanism. Tokenomics is good as well. It's nearly all out, which therefore means, unlike a lot of these other alt ones, which have vesting going out, people at these unlocks, nearly all of NEAR's is out, which is great because that means you're not going to have to worry about any of these unlocks. It's a good play on obviously AI because NEAR itself, it was struggling. We talked about this a few times in the past about how NEAR was potentially struggling for a narrative, but it fell very well into the AI narrative because of the fact that Ilya was one of the formative brains behind this paper in Google for AI. So bullish on NEAR and holding my portfolio, and I think it's got a lot of potential still in this bull market.
Another one, if you want it, is one we also covered recently on Coin Bureau Club, and one that I hold in my portfolio, and that is Honey, which is the token of Hivemapper. Hivemapper, to put it into its simplest terms, is a kind of aiming to be a decentralized Google Maps mapping protocol. Honey is the sort of built-in token, to incentivize people to install these dash cams to get all this mapping data. Honey actually itself is down bad since I bought it. It is trading, I think it's about 7 cents or something at the moment. This is one of those ones with a big supply and some fairly big unlocks on the horizon as well, I believe. But I think it's a really interesting project. And again, I think Honey is also on Coinbase.
Well, it's on Coinbase, yeah.
And it's, again, one of these ones that from a narrative point of view, I think people will be attracted to. A decentralized Google Maps. Like, that is something that could actually work. It's
deepen, and they've already mapped a reasonable amount of, they've already done quite a bit, right?
Yeah.
If I recall, it was like 20% or something. They've done quite a bit of mapping already, and I think that deepen plays are a strong one this cycle for sure. So and if it's down, potentially could be a good entry level potentially.
Not financial advice.
Not financial advice. And one more shill, of course. Quick shill. I got to shill it. I know, once a ninja, always a ninja. It's going to be Injective.
Okay. Injective hasn't been doing all that well. It hasn't been doing all that well.
Okay,
You've been very quiet.
I've been quiet. I have not been as joyous and everything.
You haven't been buying
because that's
sports
what I sold
cars
at the top. No.
Ever since Nick dumped it on the market.
No, don't worry, guys. I still hold it, still bullish. Obviously, it's an open interoperable Alt1 for open finance, and very highly performant, interoperable, built on the Cosmos SDK with obviously the IBC enabled. So you've got all these chains. But I think reason now I'm potentially more bullish is because they've obviously released INJ 3.0 with the Bitcoin halving that came at the same time. And it's basically a revamp of the tokenomics, and they're reducing the inflation bounds going forward. So less inflation, obviously, potentially price positive. So got to put a shout out there for the Injective Ninjas. Still bullish. Don't worry, guys. I'm hodling.
There we are. Good to know.
Cool.
All right. Shilling done. Let's move on to the next question. This is from Crux Monkey. Another great name. What is your opinion of the current crypto bull market? On the verge or a total dud?
It's a thought. Yeah. I mean, so obviously we had the all-time high before the halving, lots of hype going on in Q1. Everyone was getting excited. But I guess, and there was obviously talk of this is the bull market, and it was a bull market, but it was not the bull market we'd seen in previous cycles because there wasn't, we were talking about this yesterday, there wasn't this retail driven mania coming in. All the metrics were pointing to trading volumes were on exchanges for retail trading volumes were down. I think like if you're looking at Coinbase, for instance, their Q1 earnings, in the top in 2021, Q1's retail volume, it was down by like still 70% down in Q1 2024 compared to then. Right. So basically, retail still wasn't here. Search metrics were lower. Social metrics were lower. The retail just was not there. There were some altcoins that were performing. There was the meme coin madness, March meme coin madness season going on. But it wasn't this the bull market from yesteryears of extreme excitement where all the Alt1 sector was going crazy. Also, Bitcoin dominance was still right. Where Bitcoin rise, dominance was falling. So it was, the bull market is still here. I just don't think that we had the right catalyst at that point for the retail-driven frenzy, which we've seen in the past. And now the question is, okay, well, when is that going to come? That needs to come. We need some sort of additional liquidity and for retail to drive in. And I think this is something we've talked about numerous times. I think it's going to come with macro liquidity, which is, of course, the Fed and the interest rate pivot, which potentially is targeted around September, and then also potentially additional liquidity coming from their reduction in balance sheet reductions. So yeah, I mean, that's potentially, I just think it's going to have to come with additional liquidity, and macro needs to be more sound for retail to dive back in and YOLO into crypto. We need a new catalyst, which is, it's not many coming now in the crypto space. Ethereum ETFs most likely going to be denied. Bitcoin ETFs, the growth has started tapering off right now because we've seen outflows as well. So we need that liquidity, macro liquidity.
Yeah. I agree. I don't think it's been a total dud. I mean, I don't think it's over. I think it seems to be that we've had this initial surge that, I mean, just doesn't match up with previous cycles. But then we haven't had spot ETFs. We haven't had this sort of sudden opening of the floodgates to institutional capital before. So yeah, I'm kind of expecting a lull over the summer until the Fed sort of starts loosening monetary policy.
Yeah. So yeah, that's targeted about September time, right? Yeah. So it'll be data driven, of course. But we'll have to see. Yeah. That's the big thing that's going to drive it off.
Watch the Fed.
Okay. Cool. Now, this is from Mohammed Bear Boody. He's asking, what members of club gets outside of your public content?
Oh, right.
Okay. The Coin Bureau Club. Yeah.
Okay. Right. Yeah. I was thinking, what club? Okay.
I mean, come on, the boys club. What else are you? The crypto boys club.
Sure. Okay. What do members of Coin Bureau Club get outside of your public content? So the big, sort of headline thing that we do with CBC is that you get members get a weekly altcoin review. We've talked about some of the ones that we've covered. Generally, these are, well, not always ultra low caps. We've covered some of the larger ones before. Basically, members get to vote. So each week we give a selection of 4 altcoins. Members vote, and we review the top, the most voted for one the following week. And members also get a say in which ones we pick as well. Because we have a private Discord as well for CBC members where they can talk directly to us. And there is an amazing community building in that Discord, and we have got a lot of alpha actually from CBC members. There are some very, very knowledgeable people in there. So sometimes the altcoin picks are informed by what people have been speaking about, getting excited about in the Discord. But other times we will select, some projects that we think are interesting. Quite often, when we're researching altcoin projects, we will hear about other ones. We'll come across other ones in the course of that research. So often we'll put those up for review as well. So that's the big thing. Once a week you get this, deep dive that we sort of made our name with. Really.
Yeah, exactly.
Because we dive into, we go deeper into altcoins than into a specific altcoin than anyone else. So that's the big thing. You also get access to our research feed. Now this can be accessed through the Discord, but it's also on the Coin Bureau Club website. The research feed is where me, Nick, Dan in particular, our head of research, and other members of Team Coin Bureau. This is where we post sort of, several times a day, I think, on the whole. This is where we post thoughts on what we're seeing in the market. So sometimes it'll just be a few lines, maybe about, thoughts on the latest CPI print or something like that, or thoughts on an exciting altcoin that we've seen. Other times it might be a bit larger. Kevin, one of our researchers, has done a lot of gaming focused content, GameFi focused content. I think he's been big into Notcoin.
Notcoin, that's exciting.
So there's been a lot of kind of Notcoin alpha posted there, and just kind of what is on our researchers' minds. So this is a sort of constantly refreshing alpha feed, if you like. You also, CBC also you also get to see our portfolios in depth. So all core team members' portfolios. We have, a portfolio page. It gives you percentages of what we're holding. And we also have our watch lists on there as well. So the coins and tokens that we're watching too. Those are the sort of main components of it.
The main components. I think also the point around the research feed is a good one because I think that the great thing about that is you get in the full unfiltered views of different perspectives within Team Coin Bureau. I mean, I know we were one company in the sense that, but we all have different perspectives as well.
Yeah.
And also different researchers have different, specialities and like focuses in terms of what they know a bit more about. So you'll be able to get the professional's opinion on a particular kind of cryptocurrency, even though each one of us may not know all about it. Someone else may hop in and they may know the most about it. So that's what it's cool, to get these different perspectives unfiltered from the rest of Team Coin Bureau. And then other thing you get there is obviously we've got a charts channel where lots of TA is done on some coins as well.
Yep.
And there's hardware wallet giveaways as well. We give away with some cool giveaways. There's discount codes for other services.
Yep.
From data analytics to and then there's also a once monthly AMA 30 minutes with the man himself.
That's me apparently. Yeah.
Which is given. No, it's not included for everyone, by the way. Just that he doesn't have the time to do it. It's for one lucky subscriber who's done a yearly subscription once a month to have a 30-minute. Unfiltered AMA with Guy.
Yeah.
So, yeah.
I've had some really good chats actually, good chats with CBC members, and it's been a great mixture of, the people signing up. It's a great mixture of people who've been in crypto for a while and are sort of deeply obsessed with it, and others who are sort of relatively new to it, still finding their feet. And it's been a really great thing. It's like. It was a new venture for us that we sort of launched last year. We didn't know how successful it was going to be.
You launched it in a bear market.
Yeah. And obviously, it's a kind of it's more work to do, but it's great. It really is a really sort of fun thing for us to do. It's a great way of interacting with our community. So do check it out. We'll leave a link down below. We are working on a few more features for the Coin Bureau Club website.
Features and functionality coming soon. There's a roadmap for sure. I mean, we're talking to people, but we'll keep mum on that for now.
Watch this space.
Under promise, over deliver. That's our MO.
Absolutely.
There we go.
Absolutely. All right. Next question is from James XX90. Thoughts on EigenLayer Airdrop? Community was angry, and many said scam.
Yeah, there was a lot of excitement and hype built up around this airdrop, right? Over the past 2 years. If guys don't know, basically EigenLayer, big restaking protocol built on Ethereum, where people will build and utilize the Ethereum security to build these actively validated services or other sorts of projects. There was a lot of excitement about this over the past 2 years, as mentioned, and about $17 billion in TVL was built up within this protocol. And the reason there was all this excitement was obviously everyone was expecting, it was kind of, it's like, on the sly implied, airdrops, right? Points for potential airdrops, and staking through these EigenLayer contracts, you could potentially get points, right? There was, like I said, 17 billion people were super hyped about it. They knew the point season was coming. Like I mentioned, Pendle, where other protocols had built on top of, had built and also played on the Eigen potential drops and built on top. And on top of Eigen as well, these other projects, and they were launching on Eigen, EtherFi, etc. So there's a lot of excitement about Eigen airdrop and points. And the points announcement was made, and the airdrop announcement was made about 3 weeks ago. And it was like, pandemonium on Twitter, right? People were not happy. And I think the main there were a few reasons people were unhappy, some fair and some unfair. I think one of them first was that it was potentially the fact that they were you couldn't transfer them. They're non-transferable. So you'd been staking for about a year on Ethereum, you'd locked it up, you'd basically been hoping for these points, and then you learn, okay, now you can only get it after a certain period, and it's going to be a non-transferable period, right? So you can't even sell it. There was concerns potentially that the unlocks would start the VCs before that, but that wasn't the case. So that was cleared up.
That was
FUD.
Yeah.
So, and then there was, but the bigger one that the concern a lot of people had, and I think it's a fair one, is the fact that they geo-blocked nearly 75% of the world. Did you see that map? It was like
it was like, bloody hell, you're going to limited options.
Literally, like it's. But the thing is, it's like you would expect certain jurisdictions, like the US, you kind of fair, fine. But they include lots of other places from North America, Canada, like whole of Asia. Like look at China, at Singapore, all these other places, Africa, India. There were lots of places in Africa that weren't included. So they geo-blocked a lot of these places, which in and of itself, look, you don't have to give them points. There's no right they have to get this, but you create, first of all, you create sort of expectation because they allowed people to first stake and utilize the contract, right? And deposit their stake ETH into the contracts. So, they block them from getting the points, but they don't block them from putting it in, right? Or they don't give them any sort of disclaimers or points, or it's like they don't geo-block. And they also block VPNs, by the way. So it's like if you're trying to claim it through a VPN, it's going to be difficult, right?
Yeah.
So that, I think, is a bit more of a fair point to be angry with. It's like, if you're going to restrict them because of legal reasons, fine. Everyone, no one's expecting the founders to go and face trouble in that respect. But then don't accept the TVL and don't accept people to deposit prior to it, some sort of a nudge, wink, wink, right? So,
it's also a question of time, isn't it? Because a lot of people were using the protocol, spending time using it, to say nothing of locking up capital. And, obviously, there's opportunity costs that you could factor into that. But people were spending time on it. And time, as we all know, is the one commodity that you can't make more of. You don't get it back. So, and it was interesting. I think it was the Chopping Block podcast. Those guys were talking about it a lot, and it was interesting to see their perspective because obviously they're VCs, so they were sort of on the other side of it, and they made good points in that. There was this sense that they were kind of on EigenLayer's side. I mean, they're all investors in EigenLayer, but their sort of take on it was that people were being given free money, and still they weren't happy, and I can kind of see that because people's expectations do run away, and at the end of the day, it is free money. But I'm with you. I think there should have been better communication around.
I think it's all about expectation management. It's around, yes, of course, it is free money. You don't have to give it to anyone, but it's around expectations, right? Because it's the opportunity cost of money. And in crypto, if you'd been staking through and you'd been locking your ETH up and been hoping for these points, and you've seen all the guys on the Solana chain making millions on meme coins. I mean, obviously, meme coins have risks as well. But the point of the matter is, Solana itself crushed it in the past, So it's an opportunity cost potentially. But I guess it's just around expectation management. And that's all. That's very important in crypto. Like I said, under promise, over deliver earlier. Right? It's very important to manage expectations. Don't promise the world. Because you're not obligated legally to do anything. But you gotta understand the community. They will be angry. It's about their bags, and you have to see their side of it and just make sure from the get-go that these are the terms we're going to implement with regards to this. Make sure you understand it. And then, you won't have these angry people because in the end, they kind of bullied EigenLayer to adjust certain things, right?
Yeah, they unlocked some more tokens,
So the initial, which they were worried. And it's kind of like now, okay, if you see these other projects now have got potential big drops, they're kind of like watching there. There's a cool meme when Eigen's getting beaten up by all these people, and you've got Layer Zero and a few of these others like, watching from around the corner. Like, I don't want to, but speaking of Layer Zero, they've actually implemented something interesting as well around their Sybil reporting thing.
Oh yeah.
That was pretty interesting. That was a cool idea, to the extent that they say, look, because the worry these projects about giving too much is they know people are sibling. Basically, they're basically small farmers who basically buy a lot of different wallets and try and maximize the airdrop without adding a lot of value. So sibling and attacking or Sybil farming. And they said, look, if you have been engaged in Sybil activity, declare it now, and we'll guarantee you a certain amount of the drop.
I think it was 15% or something. Yeah.
Whereas if you don't, and we can find out you sibling, then you don't get anything.
Yeah.
And we're going to do a bounty program where if you can help us spot Sybils, you can get some of their distribution. So I think it's interesting because obviously there are going to be people sibling, and they're going to be industrial airdrop farming in that respect. And it's not really if you've got one guy who's making millions because he's sybiled a lot of different wallets compared to the concept of trying to make it a more all-inclusive for people who have actually added value. Actually been a lot of transfers through Layer Zero, not just used at one or two transactions on 50,000 different wallets. So I think it's, to be honest, I don't envy any project that has to do airdrops like this. It's difficult, especially when there's so much excitement built around it, because it's
become such a thing, hasn't it? And the world is watching, so to speak, and I think I think it seems to be getting harder and harder to do these things fairly. It makes you nostalgic for the days when Uniswap just gave all its users, everyone who used it, some tokens, and I think it was everyone got the same amount, didn't they?
No. I think they got more if you supplied liquidity, something like that. But if you just connected, you got a certain amount. But then if you've been a liquidity supplier and you provided liquidity, I think you got a lot more. But the point is that the cool thing about the reason there wasn't that much, controversy is because no one expected it.
Yeah, they didn't announce it. They just did it.
They just did it, which was like fascinating. You're like, wow, have you got this? I've actually got this. Wow. And,
talk about generating goodwill for people. But I mean, does this not sort of point to a wider question? It's like, the airdrops have clearly been a great thing in many ways, and they clearly have incentivized people to use protocols. But if we go back to Uniswap, like the thing that Uniswap was doing was providing a service that people wanted to use, and then those users got rewarded after the fact. Now, it kind of makes me think, it's like, if you're going to create a protocol, make it an amazing and useful thing to use first, and then reward users. I kind of feel if you're having to incentivize users, then there is a sense that it's like, well, we've got to give you some sort of reason to use this. It's like, if the protocol's good enough and doing a cool enough thing, then you should get users anyway. And
the worst thing is if you get a lot of these users through potential points, and then after the moment the tokens are distributed through the points, the protocol, the TVL falls off a cliff, and then the activity falls to
but people move on to the next.
What happened to StarkNet? Have you seen what? I don't know. I mean, I've seen the activity on StarkNet hasn't been amazing recently. I think it's a problem, right? Because and that's why these projects are trying and identify these symbols, because they are trying to identify what are the who are the users who are going to stick around, who are the users who are there for us long term. Who are the users who are going to help us grow with this project and this ecosystem, as opposed to those who are there just want the quick buck and run.
Yeah. Who's in the trenches?
Who's in the trenches?
That phrase has been discredited so badly. Who's in the trenches and who is just sort of, a tourist?
Who's your day one friends? Cool. Next question from the OG Augustin Hosera, and he's asking, can our portfolio do a 20x in this bull market, but using only the top 100 projects by market cap?
Okay. Do a 20x. Yes. Gosh, that would be difficult with only top 100 projects, because, it's market cap that determines essentially how much these things can do. I think it's still possible, just about, but you would need some lucky plays, I think. You'd also need a fair bit of diversification amongst it, and definitely ones towards the lower end of that top 100. Mind you, of course, so many of the top 100 now are projects that have just, stuck around for a very, very long time, not really doing anything, and are very unlikely to, not naming any names because that will just get us hate on Twitter. But I think it would be tricky to get those sort of returns now. Given the size of the market caps.
Definitely. I guess there's different ways one can view this question as well. It's like, one is, if the question is, can you make a 20x if you go and allocate an equal proportion to every single coin in the top 100? Definitely not. Like, it's nearly impossible, because there's the amount of capital required to move the top 100 by 20x is just not going to come this bull cycle. So that's the first thing. But you say that there's the question of, okay, can you pick one coin in the top 100 that can 20x? I guess it's also interesting because he didn't mention a time frame.
Yeah.
So do you think any coin in the top 100 this cycle could 20x this cycle?
I mean, I'm looking through them now.
Because also you got to note the market cap, right? Because the market cap is the one thing to look at. Not even looking at the project itself.
Yeah. I mean, perhaps one of the meme coins in there could do it. But I think it's tough. I think those sorts of gains nowadays, given how much bigger the market is, given how many damn tokens there are out there, I think for those sort of double-digit gains now, double-digit X gains, you've kind of got to go a lot lower down.
Yeah, I don't think it's possible. Even because if you think about it, like look at the lowest market cap coin in the top 100, right? Well, what's the market cap on that? like 700 or something billion, 700 million, right? So 20x that, you're talking 14 billion market cap. They would place it like near, what are we talking? Like just below Avalanche, between Tron and Avalanche, right?
Yeah.
No, above Avalanche, sorry. Just above Avalanche, below Shiba Inu, right? So in this market cycle, to do that, to get a project like the lowest coin to up to the top 10. I know obviously the rest, if it's a really big bull cycle, the rest of the top 10 will also move in market cap, but I still think it's pretty unlikely right now. Maybe in a bear market it would have been possible when you buy in a bear, but right now, 20x, no. The gains for sure, but just not 20x.
Yeah.
Yeah.
So how things have changed. Okay, ThinkCD says, this is the question everyone wants answered, when Nick tattoo reveal?
Well, this is a PG-13 Q&A. I'm not going to show any skin.
I'm sure we're all relieved about that.
But it's actually interesting because one of my tattoo designs is actually inspired by crypto.
Okay.
And there's an actually interesting story behind it, which I thought you guys might find interesting. And so the year is 2017.
Okay.
I just left TradFi job, corporate, straight-laced. I was stressed out about it. Now I'm in the startup world. And what's the best thing you can do to rebel against the corporate, straight-laced image? You grow some long hair and you get a tattoo. So, yeah, at this stage I was like out of corporate. I was working, and I was then fully immersed in cryptocurrency. I'd been for about a year. And as I'd said in Q&As before, the coins I bought before were Bitcoin and Ethereum, my first two coins I bought. But the third coin that I bought was Monero. I've talked about Monero a lot, right? And I also said, by the way, if I'm going to get tattooed to myself, I'm not going to just go for aesthetics. It has to be something that I'm going to have meaning and important for my life, because I'm not going to sit around with this. It's not always going to look good, especially when you get older. It has to have meaning specifically for you. So I came across Monero, and now here's an interesting thing. So the word Monero is constructed from a language called Esperanto.
Oh yeah.
So it's basically like a noun for the smallest unit of money. And Esperanto, if you guys know, it's the world's largest constructed auxiliary language, made up of like a European kind of language it's viewed as a kind of like decentralized language that can be used globally. It was created in like 1887 by some Polish guy, and it's still active this today. Very, very small, obviously, like 100,000 speakers.
It was an attempt to sort of make a universal language.
Exactly, a universal language. Exactly, yeah. So it was this attempt to create this universal language. And yeah, I mean, there's still like 100,000 speakers now. And so anyways, Monero obviously is related to that. And now when I first discovered the Monero and I was reading through it, and there was the Monero subreddit, right? And the Monero subreddit, there's the intro message, like, welcome to the Monero subreddit. It's 7 years old and it's still there to this day. And it goes into, obviously, the intro message on Reddit threads is basically, what is Monero? How can you mine Monero? What are the wallets? Where can you buy it? All this kind of stuff. And right at the end is a line in Esperanto, which says, nun vi spertus libricon, right? And that basically means, can you kind of...
Nun vi spertus libricon. Something freedom?
Yeah, now you've experienced freedom.
Ah, okay.
Now you've experienced freedom. And I was like, wow, free permissionless digital currency, a decentralized language. I just left corporate. I was in our crypto. I was free of the corporate chains that held me down. I was, and then I thought, wow, that's a cool story. It's a cool, for me personally, it means a lot because obviously it's freedom, it's crypto, it's permission, and this is why I decided, okay, I'm going to go and get this. And that's what I was tattooed here. And then a chain design as well for freedom and stuff. So yeah, to the rest of time, that's going to symbolize my move into cryptocurrency, my move from the corporate world and our decentralized permissionless world of freedom.
Okay.
So that's the story. There we
Talk
go.
about going all in.
There we go, all in, bro. No, you got to commit. And another thing was why I did this as well is because it was a commitment device to myself, right? Because I said to myself, I will never, ever go back into TradFi corporate world. Never. And in order to do that, I'm going to get this because I know that if ever I do, it'll be like a mission. It'll be like a statement of failure.
Every time I
go and put on my suit, get up at 7 a.m. to get to the tube to go into my corporate world, I'm going to basically sit there being like looking at that like, yeah, you gave up.
Yeah. Wow, that's a good way to remind yourself to
cool story.
Stay true to your value. That is a good story. That is a good story. So what nun vi spertus?
Nun vi spertus libricon. I'll link to the Monero thread below. You'll see it's 7 years old, and it's there.
Now you have experienced freedom.
Yeah, now I have experienced freedom.
That's great. Yeah.
Cool. So that was an interesting question. But now the best and most important question of them all, of course, to finish off on. Shavoli has asked, what's happening with the garden that guy had when it was a bear market?
Oh yeah, I used to make a bit of content from my garden, sort of TikTok and Instagram and Twitter stuff. Yeah, so this was back when I lived in London, we had a garden that I absolutely loved and spent a lot of time when I wasn't sort of doing crypto. In the few hours I had a week when I wasn't sort of doing crypto stuff, I would spend it in this garden. And yeah. Now that we've moved to Dubai, that garden is no more. Although I believe the people who now live in that flat do look after it.
Do they look after you? Sure.
Apparently,
have you got cameras? Are you making sure?
Yeah, the cameras.
Are they on speed dial? Like my plants are looking.
I have my sources. Have a drone fly over there every so often. But actually, we do have a garden here in Dubai. It's just I haven't quite got my head around it yet because we're talking about a massive variation in temperature.
Yeah.
So I should probably make more content from the garden here in Dubai. It's just I'm not out in it quite as much because sometimes it's just too hot.
But can you grow up? Because it's green here, obviously, in summer, trees and stuff grow. So are there all your plants, I assume, can survive through the summer in the garden there?
Yeah, I think so. We've had a lot of them in there since last summer because we've been in that house for sort of coming up on 2 years now. Yeah. They do, but some sort of struggle and some are okay. But we've now got quite a lot more shade there.
Yeah.
So I'm hoping that, but you have to water them all the time. And what we didn't have in England, if you don't water it for a couple of days, it's usually all right unless it gets really hot.
Yeah.
But here, and obviously we kind of go away every now and again. But we do have a gardener who is very good. Who does sort of keep
the criteria for that must have been very strenuous, more so than anyone who works at Coin Bureau.
They were interviewed
rigorous interviews, competency tests, etc.
Yeah.
But you've also got a solarium inside. Coin Bureau HQ has been converted to a little bit of a solarium these days because you've taken your green thumb hobby and grown a lot of stuff here in HQ, which is...
I haven't grown that. Oh, I don't know if you can see it. That one's plastic, unfortunately. But I have,
Why did you tell them? Now you've killed the illusion. Now you've killed the illusion.
It's not plastic. It's not plastic.
It's like it's called plastic. That's the
plasticus. I have got quite a few plants on the go in here, just because I feel it's just the sort of opposite to crypto. You get the seeds from a lemon and you germinate them, and somehow that's the least crypto thing you can do.
Well,
it's very rewarding.
I'm sure it's a great way to de-stress from the markets. There's nothing better.
Just good to have oxygen as well. Oxygen.
Inside,
so hopefully there are a lot of these plants. I bought some and I'm growing some from seed. They're still quite young, but hopefully within, maybe in time for the next bull market, this place will basically be like, a sort of indoor jungle.
We manifest in green markets.
Exactly. Cool. Okay. Well, thanks guys for sending in your questions. We will be back in some combo or other next week.
Yeah. Cheers, guys. Adios.
See you soon.